Alright, so that's a bullish order block. Right, so I'm going to type a bearish order block. Don't worry, I'm going to drag it to the video chart so you can see it. Alright, so let me make that a little bit smaller. Okay, I think it's way too small. Alright, so there you have it. Let me drag that. Alright, so bullish order block, bearish order block. You have that there. So let me give an example of a bearish order block, which is this. Remember, you can find this on all time frames, right? It doesn't necessarily have to be one time frame, but since I want to keep the video short, I'm only using a particular time frame. So this one is a bearish order block. Why? Because it checks all of the requirements, right? We have this up candle. Let me quickly remove this box. So we had this up candle, right, before these down candles that broke this initial structure here. This was the previous low and it was broken, creating a new lower low. Right, so you have to have an understanding of what market structure is before you can know how to use another block. So this was the up candle for a series of down candle that broke market structure. So basically you want price to trade back into that area before you bid it, before you sell it. This one is for sell triggers or short triggers. So for those who trade futures, you know what shorting is, right? So you wait for its price to trade into this area. You can either bid the top of the box or wait for or look for short short triggers on lower time frame or however you want to do it, right? So just keep it simple for now. You look to sell or short the box area. Your stop loss will ideally be a buffer below previous market structure or above the box. And your targets will be the previous low, first target, second target, third target, and maybe you can lift some to right till the market structure shifts or changes, right? So it will look somewhat like this. Let's say I bidded this hammer or whichever how you call the candlestick. I don't really count the names at my head. So this would have given you a 2-hour trade if you are taking first profit here or here, whichever place you want. Then if you left it in this place, it will give you a 4-hour trade, right? So that's how to use it. I don't want to go over another example. I want to just go over what a breaker is. We also have a breaker, right? So what's a breaker? See, I think this video is going to get longer than I expected. So what's the breaker? The breaker is, we have two types of breaker. The same way we have two types of order block, we also have two types of breaker, right? We have a bullish breaker, we have a bearish breaker, right? So what's a bullish breaker? A bullish breaker is a bearish order block that failed to hold, right? So once price pushes through a bearish order block, it becomes a bullish breaker. So let me quickly illustrate that. So say we have something like this. We have, this is our bearish order block. Price trades away from it. So instead of price holding it, right, price pushes through it. I'm quickly extend my box. Just ignore the drawing. The price pushes through it instead of price rejecting from, so it becomes a breaker. So you want price to come back to test the area before you bid for continuation. Just like the way support and resistance works, right? Let's say this was resistance. So price pushes through resistance. You wait for it to come and retest the new resistance is broke as a new support before continuation. So that's the way it works for a breaker. So this is something what you'll be looking for a bullish breaker. So a bearish breaker will be the opposite. Oops, sorry about that. The bearish breaker will be the opposite, to look somewhat like this. I'll still show you real time examples in the chart, don't worry. Let me just quickly illustrate using the diagram. So this was our bullish order block, right? Price traded away from it. So especially when price comes back, you expected it to hold, right? But it didn't hold. Price instead pushed through it. So now you'll be looking to bid or to short the pullback into the breaker, right? For continuation to the downside, right? That's like the way um, a failed support work. As previous support failed to hold, 5 broke below, then you wait to short the retest of it. Very simple. So let me quickly delete all of this. Let's see. So I'm going to try and show you guys real time examples on the chart. If I can see them, they are sometimes hard to find breakers. So let me see if I can get one of them. Okay, we had a bullish breaker here, although it's very technical, right? Just practice over time, you're going to get it. So we had the bullish breaker. This was the previous structure. This was up candle. Before a down candle that broke the structure. So that's first our bearish order block. Right, let me delete this so it won't complicate things. So remember, this first was our bearish order block, right? I said up candle for this down candle that broke this previous structure, right? It basically broke this previous structure, right? Where I put the red line, broke the structure to the downside. So normally we would have waiting for price to trade back into this and reject, right? But instead price broke through it, right? That's the way I instructed. Price broke through it. So broke through it, then you could have easily bidded or longed the retest of it, right? So see how price broke through it, came back to retest it, then started continuing to the upside, right? So the same way you bid other blocks, same way you can bid this or use it rather. Just entries anywhere around the box or inside the box. Stop loss should be a buffer below previous structure. Targets will be the previous high. Once you want to pick your validation and targets, you always look to the left, right? This is the left. The validation can easily be below here or below here, however you want it, right? So this, you look to the left, previous market structure. This was the previous high, this was the previous low. It's for a long, right? So the opposite is how you do it for a short position, right? Above will be invalidation for short, then below will be target because you're making money while price is going down. So this will be first target, and second target, if you had any other previous highs, you can use our second target. So basically this was our second target, right? So it's very easy, it's no magic. You just have to study so you get good at it and get good at citing it or seeing them in your charts, right? So entry, invalidation, first target, second target. That's the way you would bid the other block, right? So very simple. Let's look for a bearish breaker. Let me look for a bearish breaker. Let me quickly, just give me a moment. So let me look for a bearish breaker now, right? The mic was not turned on initially. Let's look for a bearish breaker. Um, see, see. Uh, uh, uh. Let me use another chart to illustrate. I'm quite finding it hard to use that one. Okay. Upsy. Let me go to the 1 hour time frame. So since I already gave you guys the whole idea of how it works. I don't know if I get to see anyone, but let's keep looking for now. So basically, it's a failed bullish order block turned to a breaker, right? You look to bid the retest quite close. Alright, so we have one here, right? This was the down candle for. Alright, so let me zoom it out a little. So here is our bullish order block. This was down candle for this is a work candle that broke market structure. It broke this previous structure, right, to the upside. So that first was a bullish order block, but price coming to retest it, it failed to hold, basically breaking down and closing through it. Make sure that it always has to close below it for it to be valid. So breaking down out of the bullish order block and closing through it, and price came to retest before continuation to the downside. So see how it failed to hold. Our bullish order block turned bearish breaker and price trading all the way down to our support area. This was the previous support. So how do you trade that? You trade that as a short trigger or short signal. So you could have easily entered on this bearish engulfing candle, right? So invalidation can be a buffer above the box, or if you want to be conservative and put it here, no problem. But I might just fix my own here, right? Then targets should be the ultimate support, or you can take some off at the previous lows. This was the previous low, this was another previous low, and this was support area. So this was basically a 6 hour trade, right? So that's how that works. Pretty simple. So that's I've touched on the I've touched on the bullish order block, bearish order block, and also bullish and bearish breaker. So let me quickly go to what a swing failure pattern is, right? So what is a swing failure pattern? How do I make this shit small? Let me quickly adjust this. Okay. All right. So I think it's okay this way. So what is a swing failure pattern? Alright, let me quickly just illustrate what that is on the chart. So yeah, a series of examples. We have the same way we have bullish order block is the same way we have the bullish swing failure pattern and the bearish swing failure SFP, right? And SFP is a swing failure pattern. So here is one. Let's see, not that. So here is one. Right, we had this high, right? We had a higher high and a lower high. That's a swing. Then price traded away from it. Then came back to it. Came back all the traded away and came back all the way into it, but failed to close above this previous high we had set here. See how price failed to close above it. It basically went above it and closed below it. Let me delete this for now. Right, so it went above it slightly but failed to close. Right, this telling you that there's amount of sell pressure around this area, so sellers are rejecting higher prices at this area, so it failed to close below it. Right, remember, a higher high and a lower high. Right, price traded away from it, came back to test it but failed to close above the previous high. This is for a bearish swing failure pattern. So what followed after is, see this series of down move, right? So you can, how to trade that is, you could have easily entered on the close of this candle. Right, sorry about that. It's a short trigger or a short signal because price is going down. You want to make money while price is going down. So you could have easily entered here at the close of the candle. Your stop loss a buffer above, right? Then targets will be the previous low, like I always say. You look to the left, first target, then second target will be your ultimate resistance. Very easy. So the same way you treat that is the same way you treat a bullish SFP. So here's an example of a bullish SFP. Let me quickly. So here is an example of a bullish SFP. We had one example here. Right? We had a low, a lower low, higher low. Alright, price traded away from it. Then came back and failed. Let me quickly move this one for now. Then came back and failed to close below that low. Right, then see what followed after, price going up. So the same way, this is for a bullish swing failure pattern, right? So you could have easily took an aggressive long at the close of that candle, right? Your stop loss would be a buffer below, then targets would be previous high, right? First target, second target. I think I took this on the Telegram and shared it on Telegram, right? So let me quickly check. I think I shared that on the Telegram channel. That was like a 4 hour, 6 hour. Yeah, this trade. I look at this trade basically, right? Was taken using a swing failure pattern and say we had 6 hour trade. Pretty simple. So let's proceed. So that's for a bullish SFP. So now sometimes, like I said, you can always combine them, right? You can combine your bullish order block and your swing failure pattern, right, the SFP. So that's what I use here. We had this bullish order block. This is a bullish order block, right? A down move for a series of up move that broke market structure to the upside. Price traded back into the order block. We look to beat the bullish order block. So additionally, we had a swing failure pattern, a bullish SFP there, right, which was this. We had multiple actually. So if you go to the 30 minutes time frame, we had a 30 swing failure pattern, which is this red line. Let me delete this for now. Right, so we had the SFP here, right? One. So you see we had the other block swing failure pattern, right? That's one. Then we also have a series of SFP on 1 hour here, right? So you had three components already: order block, M30 SFP, and H1. This 1 hour H1 SFP, which is this. See how price formed a low here, price traded away from it, came back but failed to close, then it's being followed by an up move. So hopefully I'll take profits here, and if price gets anywhere around there, I'll take in profit too. So I took a long on this yesterday. I've been basically sitting in the position for a while. So that's how you can combine it. You can also use a bigger time frame, right? Let's go to the 12 hour. You can also use a bigger time frame, like the way I did it here. yeah, this is 12 hour, right? We had a sorry about that. There's one part I use. Let me try and figure it out. See. Okay. Trying to see. Okay, I think it's here. See. Trying to hurry up because my laptop is about to go off. So we had a bearish order block here, right? We had a bearish order block here, right? Yeah, this up candle for a series of down candle that broke market structure. That's one. So you can now dial into H1 and see if you have any other confluences, that is additional items to combine with your, or additional triggers to combine with your SFP, and which is this. See, we have a swing failure pattern here, right? So price rolled away from it, came back to it, bearish H12 order block and H1 SFP. So that'll be a short trigger. Stops will be ideally above here, then targets will be to the left, the downside first target, and if it goes down you can take other targets below, right? So that's that. So I'll be ending the session here. I'll leave a recording on YouTube so you guys can go over it later on. So thank you for streaming. You can subscribe if you're not already subscribed so you can get updated each time I do more live videos, right?